If I was to ask you who the first lithium hydroxide producer to come online in Europe would be, who would you say? Today we'll be talking about European Lithium. ASX EUR are in place to be this first lithium hydroxide producer. We know about the demand drivers as the EV adoption picks up pace around the world. We know about the focus on localizing supply chains as lithium developers try to bring projects online in the region as quickly as possible. European Lithium are a company trading with a below $100 million market cap. However, there are a few contributing reasons to this, and up on the upcoming horizon, they've got a resource increase. They also have the potential of an OTC listing and final results to flow through before their DFS is released early next year. Today, we'll be unpacking the European Lithium story. If you're new here, welcome. We make daily videos, so make sure you've subscribed and turn your bell notifications on. And if you do enjoy the video, don't forget to hit the like button and feel free to share it out as well. With that, it's time for us to discuss the ASX EUR story. And so before deep diving into the ASX EUR story, it makes sense for us to take a step back and think about some of the demand drivers in the EV or electric vehicle trend, as well as also think about some of the demand drivers for the actual lithium resources in Europe. So as we know, first and foremost, there is a big focus on the electrification of fleets globally. A lot of the excitement was catalyzed by Joe Biden's election win in November. We saw the lithium prices have that price signal, and since then it's continued upwards. But further back to that, we know there was significant excitement in 2017. However, the lithium sector went through a bust through 2018, 2019, when prices moved lower and lower. However, with this initial price signal now, both carbonate and hydroxide are starting to move higher. And of course, there's now an incentive for producers and developers to start looking to bring more projects online as the economics start to stack up once again. If thinking about the European region more specifically, however, there's a focus on localization of supply chains. We know that at the moment, a lot of the processing of hydroxide and carbonate is done in Asia, and more specifically in China. But as we saw in 2020, there is a need to build resilience into supply chains. We've seen supply chain disruptions, and so there's a lot of projects looking to come online now in Europe, and there's also been an accommodative government support, both supporting with investment and funding, as well as incentives to help to drive that EV adoption as well. Further to that as well, the European region is actually one of the fastest adopters of the e-mobility. Along with Asia, the European region has seen significant uptake in electric vehicles, and this is only likely to further to play out. And so, of course, there's a huge demand for the underlying commodities that will drive this EV adoption, and lithium is first and foremost on that list. And so understanding the fact that after the boom in 2017 and the lows over the past couple of years, a lot of projects were either put into care and maintenance, or they were delayed until there was the necessary price signal that meant the economics would stack up. But as a result of this, there's been a supply shortfall, there hasn't been enough projects coming online, and of course we know demand's been picking up pace at a far faster pace than was initially anticipated. All of this has led to rising lithium prices and a need for projects to come online as quickly as possible to really feed into these supply chains. This is where European Lithium is hoping to play into. We'd love to know your thoughts on it all, so drop in a comment below what you think about the current lithium market and what do you think about the ASX EUR story. Where do you think it heads from here? Before we dive in, a reminder that I'm not a financial advisor. Nothing we discuss on the channel is financial advice. The stocks we cover are not buy recommendations. These videos are all just here as a general discussion to be that starting spot for you to do your own research from. And so then that brings us to European Lithium. As mentioned, European Lithium are hoping to become the first lithium hydroxide producer coming online in Europe. Interestingly, they're not developing a greenfields mine, which of course costs a significant amount of money, but it's also time intensive too. They have actually got a mine that was built in the 1980s by the Austrian government, and this is the cornerstone of their Wolfsberg lithium project located in Austria. It's a good jurisdiction, there's governmental support as well, but rather than having to spend what's been estimated at around $100 million for their mine, they actually are anticipating that they'll only have to pay around $5 million for refurbishment of the current mine, and they'll be able to get online much quicker as a result of that. They've also started their initial mining as well in 2017, which they've helped feed into their PFS and some of the testing through that. They built a pilot plant for their PFS, and they've now developed and finalized their process to refine concentrate into hydroxide. As a result of this, they've developed battery-grade product, and of course, there's a lot of excitement now as they move towards a DFS and ultimately hope to bring their project online over the next few years moving forward. And so what's attracting a lot of attention about the ASX EUR story is their resource extension opportunity. At the moment, their PFS, which was completed in 2019, recorded around 6 million tonnes. It had an NPV of around $350 million USD. You can see here on the right, it was $339.4 million. However, they've finalised drilling and they're currently just awaiting final results and analysis for what will likely be a significant resource upgrade. This is going to feed into it, but they're anticipating that hasn't been finalised yet, 11 million tonnes, potentially up to the 12 million tonne mark, and most significantly, a large upgrade in terms of the NPV, up to around the $700 million USD mark. If you ever think about that on a comparable basis to some of their other peers, it starts to become fascinating if this does play out moving forward. The DFS is going to be due in early 2022. The date's actually being pulled forward now into the first quarter of 2022 to help to feed into the significant demand that's being anticipated. But this resource update results, which is where a lot of EUR investors have got circled out on their calendar, is actually going to be due at the back end of October. All eyes will be on this, of course, if there's a significant upgrade in terms of the resource as well as the consequent mine life and ultimately the NPV. This has the potential to attract some more attention into the ASX EUR story. And so then I guess the question is, where to from here? So if we have a look at some of the exciting catalysts potentially up ahead, the OTC listing is due in October, so it's around here. We of course know that the OTC markets opens up investment to a broader capital pool, to a range of new funds as well that may not be able to get access to it if it's only listed over in the ASX as well as the European listing that they currently have, and also gets more eyes on the ASX EUR story. They'll list under the ticker code EULIF. They're now well funded. They recently raised over the past couple of months. They're well funded through to DFS after that $6.5 million placement, so they don't anticipate further dilution over this next period. And it is interesting as well, they're yet to lock in offtakes. Of course, I've been having discussions like many of the other lithium producers around the world have been having, but they're going to be waiting till the DFS, until the upgrade in terms of the economics for their actual result. And they think this will put them in a better position to negotiate from a position of power as well. Offtakes, as we know, go some way to de-risking the project and the investment. So it'll be interesting to see what flows out of that and the market reaction. Another interesting dynamic as well is that with the PFS, they recorded an operating cost of around $6,500 per tonne, but they are just finalising some testing, which they anticipate will be finalised in December, that will give them an insight into if they can successfully extract 3 of the byproducts. If they can do this successfully, they anticipate they can reduce their operating cost by around $1,500 and bring their costs to around $5,000 a tonne. This is a significant improvement and of course would flow through to profitability if successful. Finally, as mentioned, that JORC resource upgrade is upcoming, potentially by the end of October, and then all eyes will be on the DFS in Q1 2022. It's a fascinating period up ahead for ASX EUR. Of course, they're still in the very early stages. It's inherently risky and inherently likely to be volatile as a result of it, but the opportunity up ahead, if they can continue to move forward and bring their project online, is going to be a fascinating one to watch. If you did enjoy the video, don't forget to hit the like button. Feel free to share it out as well. As mentioned, we make daily videos, so if you're new here, make sure you've subscribed and turn your bell notifications on so you'll be updated every time we drop a new video. We'd love to know your thoughts on it all, so drop in a comment below. This past period we've interviewed a range of different CEOs, so we'll leave links to those up above as well that you can check out after this one. Thank you so much for joining us. For now, stay well and happy investing.